So tunaanza.
Good evening, Edwin.
Hi, Michael. 1 second.
All right.
Good evening, everybody, and welcome to our session for today. So today we'll be discussing stocks and specifications. With me today is Michael Waithaka. Michael, karibu. Maybe you can say hi.
Thank you, Edwin.
Yes.
Whether how's your day?
It was cool.
What about the trading day?
A bit active. So most of the activity happened during afternoon. So I missed a lot of opportunities.
Oh, so you didn't take you didn't take some trades actually.
There were some trades which were running from Friday, so at least those ones are closed. Majority of them closed with a profit.
Sure. Today, by the way, it was a good day.
But today I haven't placed any trades, though there was quite activity. So when I came out of class at around 4, I noticed that so much had happened in between.
Yeah, actually, I noticed that very early in the morning when I saw a market gap. And I noticed that market might be volatile today. And those who were keen, actually, they made some good profits. Yeah, so basically it was a good day. It was a good day, especially for the dollar pairs, when you talk for USD pairs, and also gold. So it was a good day.
What did you take, or what were you focusing on?
From Friday, I've been trading pound yen and pound USD. So after I saw the gap, market created the gap, that is Euro USD, not Euro, pound USD. I waited for the retest. Market tried to close the gap. You know, we have to close that gap, then we continue the movement.
Yeah.
And since the momentum was very strong, it didn't fully close. Okay. But at least it got to a point where I got an entry. And yeah, it was a good day. It was a good trading day.
That's exciting.
Yeah, but today I can see we have a different topic.
Yes.
And I think this is interesting because by the way, for the longest time that we have been training, I have noticed a challenge. And the biggest challenge is that traders or people who want to trade, they don't know the class of assets that we have. Most of them think we only have forex. By there, you'll find they come to the class and they ask, maybe I want to learn about forex. I want to know about forex. So most of them only know about forex markets.
Yeah, yet we have quite a variety.
Sure. So this is a good topic. So this is stocks and specifications. And by the way, I was looking at Tesla. Have you been watching Tesla this year?
Not of late.
Yeah, I think Tesla for the last 2 months, that is from January, it has been among the top performing stocks. Yeah, with an appreciation of around even 67%.
Yeah, which is quite high.
Yeah, for the last 2 months, it was a good movement. So somebody who had an idea about stock markets, they could have made something good from that.
Yes.
So that's why we are talking of diversifying our knowledge in the market. And today we are dealing with this stock. So basically that was a stock that I've been looking at. That is Tesla, because last year it dropped to almost 50%. So I was looking for the stock to regain this year. Yeah, and January and February was a good month. So today I want you to explain to us at least how do we trade these stocks, what we want to look at these stocks. FX Pesa, when we talk of EGM securities or FX Pesa, which stocks are we able to trade with them? So which stocks are we able to access? The capital that we need and all that. So there are some few topics. That I want us to cover today to try and answer some of these questions, so that we can at least try to diversify in these markets.
All right, you'll start us off.
Yes.
All right.
So let's go to the next slide. So when you talk of stock, basically stocks are units of ownership in a company, and stocks are also known as equities. That's why in our platform, by the way, for example, the MetaTrader 5, you'll find stocks under equities. So we call them stocks or equities. So traders transact in units called shares. So for you to buy a stock, for example, you can say that I have a certain number of shares in a company. So basically that's how we transact stocks. And a share is the smallest unit of ownership in a company. So basically the way we have a smallest unit in stocks, the smallest unit is a share. So you can have one share or you can have several number of shares according to the investment that you have made. So this entitles the shareholder to a proportion of the corporation assets and profits equivalent to the amount of stocks they own. So remember we said that stocks is an ownership in a company. So there are some entitlements to that, meaning you are already a shareholder, you have a share, you're a shareholder, and there is an entitlement to that. That is mostly of profits equivalent to the amount of stocks that you own, or a trader owns, or an investor owns. So a company must go through an IPO in order to have its shares publicly traded. So when you talk of an IPO, basically we are talking of public offering, that is initial public offering. So it refers to the process of offering shares of a private corporation to the public in a new stock issuance. So it means once you have an IPO, then as traders or investors, we are able to invest in your company, we are able to own shares. And then private investors want to fully realize gains from their investment by allowing public investors to participate in the offering. So you understand that when you talk of ownership or a stock, basically you're owning a currency. So not a currency, you're owning a part of that company. So today we want to understand how do you own a company? For example, let's say you want to own you want to get a share or even to trade a stock from US. So how can you own it? Maybe you want to trade a share or even a stock in Kenya. How can you own it? And again, if you can't own it, how else can you trade it? So do we trade stocks the same way as we trade currencies or other assets which we don't own? So basically that's what we are going to cover. And at that point, I would like Edwin to continue from there to try at least answer some of these questions about stocks.
All right. Thanks for that introduction, Michael. So what then do we offer as EGM securities? So for us, we offer contracts for difference. So when you talk of a contracts for difference, it's basically a financial contract between a trader and the broker. And this contract allows the exchange of the difference between the market value of the underlying asset when the trader opens that trade with the value at which that stock will be trading, the point at which the trader decides to close that stock or those number of stocks that he transacted. So basically, just like other assets, your interest as a trader is the change in price. So you do not own the share, or you do not own those stocks that you will have bought. Rather, you'll hold those shares anticipating for the price to change, so that upon realizing profit, you can then liquidate the shares and make your profit. So the difference in the settlement is between the opening price and the closing price. So all you're interested in is for that fluctuation in price. Then when you talk of contracts for difference, they provide a unique opportunity to trade by predicting price movements in the market without owning the underlying assets. So we shall see the difference between physical stocks and contracts for difference. So we offer contracts for difference. So when it comes to the differences between what we offer, so we offer contracts for difference and physical stocks. The first difference is that the shareholder does not own part of the company. However, if you are trading physical stocks, as a shareholder, you'd be entitled to those shares that you have bought into that company. You have the full rights over those shares that you'll have bought into the specific company that you transacted. Then the other difference is that you can trade both long and short. So in our case, contracts for difference are traded both sides of the market. So you can either buy low, anticipating for the price to rise so that you can liquidate them at a higher price. However, if for whatever reason those stocks have been overvalued, or if they are overvalued, you can sell them anticipating for the price to drop, to then buy back later at a lower price and get value for your money. When it comes to physical stocks, you can only buy. You play the market just one side. So you can only buy hoping that the price will rise in the near future. The other difference is that with contracts for difference, shareholders do not have voting rights. So when shareholders attend an annual general meeting, ordinarily they would vote over decisions which have been floated in that meeting. So for us, there's no voting rights. So if you own CFDs, there are no voting rights. However, if you had physical stocks, or if you're transacting physical stocks, then you'd have a right to vote in the annual general meeting. Then the other thing is that contracts for difference are leveraged. So when you talk of leverage, we are saying that you can be able to use a small portion of your capital to own a sizable contract. So I'll try to explain how leverage comes in as we go along. If you are dealing with physical stocks, you'd get no leverage. So you buy 1:1. So whatever amount of money that you have, if, for example, one stock is going for $50, if there's no leverage, and perhaps you have $200, if each share is going for $50, then it means you cannot buy more than 4 shares. So you'd only buy an amount of shares for the value that you have in your account. Which stocks do we then offer? So we offer stocks of US companies. So we have around 211 US companies. And the minimum number of shares per trade is 1. So the list that you can buy is just 1 share. Then the maximum number of shares per trade is 300. So if you want to buy more, then you'd need to open several contracts. Then when it comes to the commission or the cost of trading, for US shares, you are charged you're charged 1.5 US cents. And this is a fixed commission per share. So as we go along, we shall see how you'd be able to transact the cost of trading. Then for you to trade these shares, they are open for trading from 4:30 p.m. Kenyan time up to 11 p.m. Kenyan time. Any other time, the markets would be closed and you cannot access these shares. Then when it comes to margin, or when it comes to the issue of leverage, it's between 5% to 100%. So each company would have its own margin. Then we also have 22 companies in the European zone and 36 companies in the UK, which you can also buy and sell. So when it comes to these two categories, the minimum number of shares per trade is 1, and the maximum number of shares per trade is 300 shares. So if you want to buy more than 300 shares, then you'd have to open an extra trade, or an extra trade. Then there's no commission for these two categories, so they're free of charge for you to trade them. Then the trading hours for EU shares and UK shares is from 10 a.m. Kenyan time up to around 6:30 p.m. Kenyan time. Then when you're trading, how do you calculate the cost or the commission? So the commission is the fee that you'd pay once you buy or sell shares. So for US shares, the commission is 1.5 US cents per share. So for example, if you have decided to buy 50 Amazon shares, for each share you'd pay 1.5 US cents. So it then means that you'd be charged 50 shares times the cost per share, which is 15 cents. So you'd end up paying 75 US cents, which is quite affordable. And this is what makes contracts for difference quite attractive. The cost of trading is quite low. So we'll now jump into the charts to explain how you'd go about placing trades of shares in the platform, in the trading platform. Michael, tell me once you're able to see my MT4. Michael, are you there?
Yes, I'm able to see it, Edwin.
Yes. So basically,
before you continue, Edwin, you talked about trading CFDs and the physical shares. And we said that you can trade CFDs on both sides. That is either it's dropping or it's rising.
Yes.
So does it mean it's more advantage to trade CFDs than trading the physical ones, or you can even combine? So what can you advise on that?
Yeah, it's quite advantageous because, like locally, when you're trading physical shares which are traded in Nairobi Stock Exchange, or which have been floated in Nairobi Stock Exchange, you can only trade one way. You can only buy, anticipating for the value to rise. So in our case, it's a bit advantageous because you have the advantage of selling when they are overvalued and you're hoping for the price to drop. But ordinarily, like you trade, like you transact physical shares, you can also buy CFDs or CFD shares when the value is low and you're hoping that price might rise in the near future. So you play both ways, just like other assets that we offer.
Okay, thank you.
Yes. So basically, once you open your MT5 or MT4, you'd be able to find these shares. So right from this point, all these are shares. So what you do, if there's a specific company which you are targeting, you can go to File, then you go to New Chart, then you go to the folder where we have shares. So we have EU equities. So shares are also called equities, as Michael had mentioned. Then we have the folder for UK shares or equities. Then we have US equities or US shares. So if, for example, you are looking for Apple, you'll just scroll through and check where Apple is. Can you spot it, Michael? Yeah, here you go. Then once you click on it, it will open the chart for Apple. Then once you've done your analysis, both fundamentals and technical, then if, for example, you want to buy, you'd go to the buy button and click buy. So the least that you can transact is a volume of 1. But if you want more, you can increase to a maximum of 300 per contract. So if, for example, I want to buy like 10 shares, I'll just click 10. Then I'll click buy. And once I click buy, I'll
Edwin,
have that, yes.
For those who have been trading, maybe for trading Forex and other assets. So basically, when you're talking of lot size, it's equivalent to talking of shares in equities. So if you're trading maybe pound USD and you're trading with a lot size of 1, then in Apple you open with a lot of or volume of 1. So it's equivalent to a share of 1.
No, like in this case, the 1 share is sort of like 0.01. 1 share is the least contract size that you can transact.
Okay.
Yes.
All right, thank you.
Yes. So yeah, so once you open, it will just move or you just wait for the price to move like you would with our other assets. So in this case, since we've bought and we've bought 10 shares at 151.71. So your interest will be to have the price rising above that entry. And once it's above that entry, you can close that trade at any point in time. Then the other thing that I was trying to explain earlier is the margin. So when it comes to the margin, I mentioned that our shares are leveraged. So when it comes to leverage, I'll just share another screen to explain leverage. Just give me a minute.
So as you share the screen, Edwin, because you said that you're trading CFDs, so it's also advisable to try and trade shares or maybe stocks that are volatile, that have big movements, for you at least to make something.
Yes. Because as I mentioned earlier, your interest is to have the price fluctuating in your favor. So are you able to see my screen?
Yes, it's visible.
Yeah. So when it comes to leverage, if we select, so I'm projecting the FXPS platform. So if I select Apple from the category of assets, you will notice that if I put one share, so if I was to buy one share, you will notice that the required margin is $22.76. So I've already mentioned that the least or the lowest contract is just one share. So what you will notice is that price at the moment is at 151.74. Around 151. Let's take 151 for argument's sake. Then the required margin, from what we can see here, Michael, is 22.76.
Yeah, sure.
So what happens is that if you are trading physical shares, for you to buy one piece of Apple or one share of Apple, you'd require $151.70.
Okay.
But now, if you go to the FX Pesa website, you'll be able to see that when you go to the shares section and you zero in on where Apple is, you'll notice that the margin for Apple is 15%. So it then means that for you to buy one share, instead of requiring 151.86, you'll just require 15% of that amount. So if you do 15% of 151.82, I'm sure you'll be able to get 22.77. So it then means that you're getting value for your money, or the value for investment. Because if ordinarily you'd buy at 151.80, but since we are giving you a margin, which would require you to only contribute 15% of the actual value of that share, then it means that now that you'd spend only, or you'd only require to commit $22.77, then that gives you chance to be able to buy shares in bulk. So that is how the issue of margin would come in, or leverage. You get the point, Michael?
Yes, I get it. So yeah, it's advisable to use, by the way, which is the maximum leverage you can use?
No, what happens is that each share has its own margin requirement.
So it's a fixed
Yeah,
one.
it's fixed. Yeah, it's fixed. So okay, for Apple, it's 15%.
All right.
Yeah. So basically, that's it with the specifications of stocks.
So, do you have anything to trade? Yeah, for you to trade stocks, that's a new idea. For you to trade stocks, which knowledge do you need to know? And again, or which knowledge do you need to have for you to trade a stock? That is either a CFD or a physical one. And again, do you have sites maybe that you can recommend somebody to do research on for those ones who want to trade stocks?
So basically, when it comes to the knowledge, you need to follow the happenings of that specific company. Then when it comes to the events for that particular company, like when you go to investing.com, you can go to earnings calendar on the top right side, and you'd be able to see any events for different companies which are in the near future, or any announcements that are to be announced in the near future. So this would then arm you beforehand in order to anticipate how those events will turn out. So things like earnings. So if there's a quarterly earning in the near future relating to a specific company, then if those earnings turn out way better than the expectation, then you'd expect that company's share to gain value. If there's change in management and there's optimism that the management that has taken over, has a good record in the past, again, you'd notice that the company might start to fluctuate. So any good news in relation to a company would cause that company to have its shares gaining value. But anything that may negatively affect the growth prospects of that company, then those news mainly cause that company's share to perform badly or to depreciate. So, for example, if you're dealing with an airline and perhaps there's an accident, then you might find that the shares might tumble. If, for example, the cost of fuel is going higher and higher, since that contributes it contributes to the cost. It's a major cost component of airline companies. Then you might notice that the performances might be affected across the board. So those are some of the things that might affect the performance of companies. So every other time, our market analyst, Rufus, normally highlights some of these issues. So I'd highly recommend you to keep a close watch on the sessions that he does at 11 a.m. every day, Monday to Thursday, and on Tuesday and Thursday. So these are some of the things that he discusses. So he will keep you up to date regarding the fundamentals of different assets.
That is well covered. And then I think something else that I can add, Edwin. For those ones who want maybe to start trading as stocks, or they want to start, they want to understand about stocks, they can try it on a demo account.
Yes.
So open 1 or 2 trades on a demo account, see how it works, try to do some analysis.
Yes.
Then after they understand how it works, then they can transfer the trades to a live account.
Yeah, and they can try to trade some popular companies. Yes. So like Apple.
Do they have trading
Google,
time? Did you cover the trading time?
Yeah.
Did you cover the trading time?
Yes, we did.
Yeah, thank you.
Yeah.
So they need to understand the trading time.
Yes.
Yes, and do the practice, of course.
Yeah.
So it's good we diversify, we try to trade stocks and of course other assets.
Yes.
So do you advise we trade mostly the international stocks or even the local stocks? Which is your take?
I'd recommend them to first try international stocks because that's where we have bigger volumes. Then as time goes by, then they can chip into the local stocks.
Thank you. I think that is it on my side.
All right. I think we'll stop there for today. So I hope you've been able to learn something and you'd be looking into stocks as well as part of what you will be trading in your. I mean, I hope you'll consider stocks as part of what you trade every other day. So I think we will stop there for today. And I don't know, do you have anything else to add, Michael, before we close?
All I can say is that we need to attend trainings. So let's come to trainings so that we can know how to analyze these markets. So we have various training centers. That is in Kitengela. That is in Kitengela Mall. We have a training center at Isli, Al Mukaram Shopping Center. Another one at Tika, that is Maisha Heights, that floor. We also have a training center in Nakuru, that is Tower 1, that floor. And another training center in Eldoret, that is Rupa Mall, that floor. Get to those training center, you'll find qualified traders and trainers, and you'll be able to understand how the market works. Yep. So I think that is it. And also visit the FX Pesa YouTube channel to learn more and even understand more. Thank you, Edwin.
All right, we will stop there, and we wish to thank you all for finding time to attend, and we look forward to having you in our future sessions. So enjoy the rest of your evening. Bye.